definitely seeing the market plunging on Friday, and in fact, we saw some pretty steep losses 3 times throughout the week. But certainly on Friday, we did see the heaviest of the losses. And for the week, the Dow Jones Industrial Average losing 2.6%, about 259 points for the week. The S&P down 4% for the week, and the Nasdaq down 5% for the week. We also closed out the month of October as well. Take a look at the major averages for October. The Dow actually seeing no change for October. However, the S&P down almost 2%, and the S&P falling for October. This is our first monthly drop since February, so this ends a 7-month streak of gains for the S&P 500, and the Nasdaq down 3.64%. So the big drop on Friday was after we got these economic reports, personal spending dropping for the first time in 5 months, consumer confidence decreasing. And remember, the S&P before Friday's session, before we started out, the S&P was up 56% since March the 9th. And all along, there had been concern that the market was getting ahead of itself, especially with earnings. And there seems to be some conflicting economic data, but some traders say you kind of expect that as you recover from a recession. But over the past week, we learned that the economy grew for the first time in a year. We got third quarter GDP. We got that report on Thursday. That was better than expected. But the overarching concern always goes back to the consumer. And with unemployment approaching 10%, there still seems to be a lot of concern about how the economy and when the economy can recover. So this huge rally since March has been led by the financials and materials. And when we saw the selling on Friday, we saw the selling particularly in the financials and the areas that have led us up higher. CIT, of course, the commercial lender, plunging there as investor Carl Icahn agreeing to support its prepackaged bankruptcy plan, and Citigroup tumbling on a report that banking analyst Mike Mayo reporting a $10 billion write-down for this quarter, possibly for Citigroup.